All right. Hi, everyone. You have Pauline here with Zentail for another Ask the Experts interview session. I'm really excited, guys, to speak with Ryan Thompson from TaxJar today, who's going to cover off on a lot of things e-commerce. Ryan, welcome.
Thanks. Great to be here.
Awesome. So you're in the hot seat. We're going to talk a lot about taxes. As you've got a ton of experience in e-commerce as co-founder and CRO of TaxJar, I'm sure we can pick your brain for hours here. I think what's really interesting is the South Dakota Wayfair ruling changed a lot. What would you say was the largest impact on e-commerce sellers?
Yeah, in 2018, when this all came to be a bit of reality, we were skeptical that this was going to happen, and we weren't in favor of it either, because we knew that if this was going to happen, it was going to change the lives of e-commerce merchants, especially the small ones, for the worse. And it didn't seem fair to us. But essentially what happened was sellers, as they were expanding e-commerce and multi-channel, they were selling more sales in more states. And the old rules were that you only had to deal with sales tax hassles in the states where you had what we call physical nexus. So where you were physically located as a e-commerce owner, or if you had warehouses or employees, those were the states that you had to worry about for sales tax, and the rest you didn't. And when the Wayfair change happened, basically what that meant was that each state now could set a threshold that said, even though you're not located in my state, or you don't have people who, employees or warehousing in my state, once you hit this threshold, all of a sudden you have the same sales tax obligations to collect and remit as somebody who's physically located. And so it just, we had hundreds or thousands of merchants that before they only had to comply in one or maybe two states. And that just blew up, and to where, now many of them are complying in 20, 30, 40 states. And it's just been from a logistics and management perspective, it's been a nightmare for them.
Yeah, I can only imagine. So in the beginning, especially, it was very unclear as to, what each state's policies were. It seemed like there was a pretty generic timeline for when you had to get it in. And so how have sellers been adapting? Clearly, it's been some time since the ruling came out, but for whether you're using TaxJar or not, what is a seller's first step?
Yeah, I mean, I would venture to guess that compliance based off of Wayfair is still all over the place. We talk to merchants every day who just don't, they don't understand it, and I can't blame them. One of the big challenges within sales tax is that all of the sales tax legislation is at a state by state level. So there's no federal jurisdiction at all for sales tax. So when Wayfair happened, it was left to the states to decide what their rules were going to be. So you can imagine, most states kind of got around this idea of it's either going to be the number of transactions in my state, or it's going to be the dollar sales in my state, or some combination of both. But even within that, some states would say it's, X number of transactions and this amount of sales. Some states would say it's or transactions or amount of sales when you hit the threshold. Some would look at trailing 12 months. Some would look at year to date. So even within that, it's almost impossible. One of the ways that we tried to help is as soon as we found the ruling went through, part of what TaxJar does is we ingest all of the seller sales data and then help them with sales tax compliance. So we were in a position where we could see all of their transactions and basically use that data to help them understand where they now have economic nexus, or where they're approaching it. So if we saw that a state that might have 1,000 transactions would be the threshold to hit, and we could see that they were at 800, we could say, hey, you're 80% of the way there, something to put on your radar.
Yeah.
Outside of having tools like that, or the ability to download your transactions by state into a spreadsheet and do some manipulation to figure it out, there still is no easy answer. It's still a very unfair problem that these merchants have been faced with.
Yeah, it's huge. And so are there, what are the big risks and penalties for someone who is not compliant, right? Is that also on a state by state basis, and how severe does it get?
Yeah, we talk about this all the time. We've seen two ways to approach this, especially when people are giving advice to merchants on how to handle sales tax compliance. One is fear, which is if you're not compliant in every state, you're in trouble, which I don't think is reality. And the other one is more around your willingness to take a risk, which I think is much more realistic. So the way that I think about this is that when you are starting a business, or maybe you're approaching economic nexus thresholds in a state, what you have to think about is, what is your willingness for the state to come to you and say, hey, we think that you should be complying and you're not. And so, if I were to play a scenario where if you're a merchant who is selling, say, $1,000 of merchandise in a state where you should be collecting sales tax, basically what you're not collecting is, say, it's 7% of that, so $70 or whatever that is. The question that I would ask a merchant is, are you willing to have to come out of pocket for that $70 plus interest and penalty, which, combined, maybe those are 10 or 15%, or are you willing to spend the upfront effort to be compliant? So a merchant that has an exposure of $100 or maybe a couple $100, if I'm in their shoes, I would probably say, I don't know if that compliance is worth my time right now. I'm willing to take the risk.
Yeah.
And by the way, when you look at the auditor on the other side of the table, their job is to go bring in revenue for the state. So how much time are they going to spend chasing this, $100 fee versus a merchant who might be out of compliance for $1 million? So that's the mindset that I try to pass on. Is it's really about, like, what is your risk tolerance? And then maybe try to do some math around where you're approaching that risk tolerance, and then focus on those states first on where to be compliant.
That makes sense.
The one other thing that I would throw in is always be compliant in your home state. So where you're physically running your business out of, or if you have, your inventory stored at home or whatever it might be, you don't really have an excuse on why you're not compliant in your home state. So as you're spinning up your business, it always makes sense to be compliant in your home state first.
That makes sense. Going back real quick to Nexus and approaching the limit, what are people's strategies? So in line with the risk, are companies saying, like, oh, look, we're approaching the 80%, let's calm down sales potentially in that area if they have the ability to, or they're like, let's bring it home all the way?
We don't see that scenario come out as much. What we have seen is there have been states where, especially as they were kind of working through their version of the economic nexus rulings, where they would come out with legislation and you would look at it and it would just be nonsense. We would have merchants come to us and say, like, I'm selling product in Texas. Should I just turn off all sales in Texas because this is way too confusing?
Right.
So that scenario has come up before. I think now things have kind of balanced themselves out, where merchants have learned, like, look, if I'm doing well in a state, I'm probably, the thresholds in those states are typically like more than $100,000 of sales, a couple $100,000 of sales. So from an economic perspective, it probably doesn't make sense to try to, like, peel back your growth in a state or turn off a state. At that point, what we see is they're just, they're in a financial position where figuring out how to become compliant ends up being worth the time, and they just kind of work through it.
Yeah. Okay, great. And so then, so concentrate in the area where you are physically located. In the era of FBA and like 3PL distributors, does that apply for them as well?
Yeah, so the other interesting ruling that has kind of followed Wayfair is the Marketplace Facilitator Act. And this one is probably a little bit less understood or known, but essentially what has happened is that state governments have come out and said, for large marketplaces like an Amazon, they're saying, we would rather see Amazon collect and remit on behalf of the Amazon sellers than have each seller be responsible for themselves. And you can understand why this makes sense, because if Amazon has 100,000 merchants or more in a state like California, it's much easier for the state to go have a conversation with Amazon than to go have a conversation with 100,000 merchants. So I think it's around 30 states now that have adopted some kind of marketplace facilitator ruling, where the great thing for the merchants, and again, this is like, from a TaxJar perspective, the more merchants that we work with, the better for our business. But the right thing for the merchants who are selling in these marketplaces is to try to pull this obligation off of them.
Yeah.
So this is a great thing. And what we like to see is that where marketplaces exist, that in states where marketplace facilitator are rules that govern them, that if this obligation can go away from the sellers and just be dependent on the marketplace like Amazon, the burden for that seller essentially goes away, which is a good thing.
Yeah. That is a huge relief, I think, to a lot of people out there. You're, I think, correct in that I was less familiar with that one, and that goes a long way. So what else, to be clear, it does sound like if you work with a 3PL, that would still fall under grounds of nexus in a physical sense.
Yeah, so if I were to separate marketplace, so the definition of a marketplace is largely around the sale. So if you're listing product with other merchants on a place where buyers can buy, that's where the marketplace facilitator rules apply. In terms of 3PL, in terms of warehousing, those types of rules, you still have to abide by. Where if you're selling 3PL and you have a shopping cart, then you have to look at rules like economic nexus,
right,
or physical presence in a warehouse and abide by those sales tax rules.
Got it. Great. So anything else kind of relevant for marketplace sellers?
Well, what we see more often than not is that there's this combination. So for we have tons of merchants, as you do, that are multi-channel,
yep,
and they're selling in some combination, right? So you have your Amazon store, and then you have your, whatever cart that you're using. And so while a portion of your sale may be covered under Marketplace Facilitator, what you need to look at is what is the rest of your business. So the view is, the way to think about it is, if you have a multi-channel, you need to look at it channel by channel to figure out what are the channels that I'm selling in where Marketplace Facilitator will take care of me, and then what are the channels that I'm selling in where my sales tax obligation is up to me. So again, I'd like to think Marketplace Facilitator solves this pain point for merchants. It does in some channels, in some states, and that's a good thing. But the merchant is left to go figure out where that applies and where it doesn't. We also try to, I don't know if it's helpful, but we have a lot of blog content where we will keep up with these rules state by state. So we will show, in which states Marketplace Facilitator applies, or what economic nexus thresholds are state by state, just to try to help merchants understand where they need to be compliant and where they're covered by the states.
Absolutely. Whenever we do research, that's the first place we go. So we are well aware, but we can certainly link to it for everyone else who is listening today. Awesome. Okay. There are a lot of moving pieces, it sounds like. And so how are you guys keeping up with all of that? Obviously
this is the reality is we spend a lot of time here. We have an in-house team of sales tax researchers and experts, which has grown significantly over the years.
Oh, wow.
And this is what they do all day, every day. And this can be things like, following Marketplace Facilitator rules, following changes in economic nexus. Even with COVID, a lot of the states came out with extensions for sales tax filing, and we monitor and track and report on all of that so merchants can understand. But even before all of that stuff, the numbers that are thrown around is there's something like 14,000 different sales tax jurisdictions in the U.S. And those change all of the time. So every month we're monitoring all of the rules by state and making sure that our technology keeps up with those changes. There are rules for product tax codes. So the example in New York, if you're buying clothing that's under $110 per item, that's not taxable. But once you go over $110, that's considered a luxury item. So it becomes taxable. And there are thousands and thousands of rules like that too, state by state. So this is an area where when we started the business, we didn't know how complicated this was. Who knows if we knew how painful this was, where we'd be right now. But we came into it a little bit naive, and part of building the company is we've just had to build the team to be monitoring and watching this all of the time.
Absolutely. It sounds like you guys are fluid, flexible, but then also passionate, right? So I think that helps you guys go a long way.
Or we find the people that are passionate about this and bring them along.
Very good, very good. Sounds like a fun ride. And so let's see. So 14,000 jurisdictions, I can't even wrap my head around that. So clearly, last time I checked, I think we have like 51, 52 states / provinces. Where are the other 13,900?
Oh, yeah. So it's a sales tax jurisdiction. The way sales tax works is kind of interesting. Well, it's interesting to us in the business. So typically what happens is a state will create a sales tax rate. And then what happens is the jurisdictions within that state will kind of have their add-ons. So a county within a state might say, hey, on top of the state rate of 5%, we're going to add a county rate of 2%. And then within the county, there might be a school district or a fire district or an ambulance district.
Wow.
And they kind of all layer on their percentages. So when I'm sitting in my home, my sales tax rate might be 8.5%. But the way that is built is by a state rate plus a county rate plus multiple potential local rates. And then so, when I sell something, if I have to collect at my location, then I would collect that 8.5%. And then when I remit that to the state, they basically figure out how to break that out across the state and all of the jurisdictions. So the way that you get to 14,000 is by looking at all of those permutations across all of the small jurisdictions across the country.
That makes sense. So the jurisdictions all bubble up to the state tax. It's not like you're being charged a state tax in addition to.
That's right. Yeah. Yeah. The good news is that you only have to collect once, right, and then it's all in the back end to figure out how that money gets allocated.
See, there's good news to taxes. We just
a few here and there.
That's great. Good. All right. So what are some common mistakes that sellers have when approaching their taxes?
Yeah. So there are a bunch. Most of them are around accuracy, which at the end of the day is something that we try to manage to take off their plate. If I were to talk about a few that are kind of the more critical ones, the number one mistake that anybody could make in sales tax is to collect sales tax but not remit it to the state. Basically what that's doing is fraud. So before you're set up to collect in the state, don't collect in the state. And then there's a process that you go through where you tell the state, hey, I'm collecting sales tax, or I'm planning on selling in your state. I need a seller certificate or whatever it is with a number. And then the state knows, hey, you're going to be selling in the state. It's okay to collect now. So that's the number one, do not do. That's literally I think the only thing that you can do in sales tax that could have you end up in jail. So everything else below that becomes, not menial, but much more manageable.
Yeah.
At that point, it becomes things like, am I collecting, this is the conversation that we had a little bit earlier, is am I collecting in the states where I should be? So, thinking about physical nexus, thinking about economic nexus, and then kind of applying that risk tolerance to think about where should I be collecting. That's probably the second biggest concern. So, the scenario that we don't want to see sellers get into is the surprise of, hey, I've sold millions of dollars of sales in a state and I just haven't collected yet. Because then when the state says, hey, you owe us $100,000, the merchants aren't going to go back to the sellers to collect that sales tax. That's going to come out of pocket.
Exactly.
And that's a problem.
Definitely.
So those are probably the two biggest concerns around sales tax. When you get into am I categorizing my product properly to where the sales tax rate could change a little bit? Or am I doing something where my sales tax calculation rate is off by 0.25%? Those things happen all the time. At the end of the day, those are less concerning than the couple of big ones that I mentioned.
Got it. That makes sense. I love offering people advice on how to set a jail. So perfect. Let's see. So the 14,000 jurisdictions, if I'm correct, there's also different sales tax per product categories, right?
This is true. So in this, I don't know how you do this math, but I guess that probably makes this an exponentially harder challenge.
Yeah. So if I'm a brand selling kind of one thing, sales tax is pretty straightforward. But if I have, a shop that sells a variety of items, pick a product and it's different than the next guy.
That's right. Yeah. So if you have one product, you'd be responsible for figuring out if any state has rules for that product, which, at the end of the day, like there are 45 states that have sales tax. So at worst, you have to figure out 45 different solutions or rates.
Yeah.
And then when you have 10 different products, that becomes 10 times as difficult. So there is complexity around this. This is maybe a shameless plug, but one of the things that we have recently launched is, we call it Emmet. It's AI that basically does this for merchants. So what we've learned is nobody, when you look at the sales tax categories, these aren't like all that clear either. You can get into nuances in terms of like what types of ingredients are in food, and then that can change taxability rules or whatever it may be. But when, we've established a pretty big database of transactions over the years, and the better that we're able to properly categorize those, we can apply AI and kind of like do that categorization for merchants now. So, whether that's us or somebody else, their technology is being built and figure out ways to make this easier. Where this should go is that sellers should be able to sell what they want to sell, where they want to sell it, and then let technology go figure out what the right way to handle the tax is. I think the unfortunate piece is the states aren't going to necessarily make this easier. The good news is there are ways to do this with technology to make it go away.
Yeah, beautiful. That was awesome. I have one last nitty-gritty question just because I'm curious, and then I wanted to have a little fun with a little like rapid fire session with you.
Sweet.
So last real question is, what happens if I live in Maryland and I buy something my shop is based out of Maryland. Someone from Pennsylvania buys something for someone in New York.
Yep.
Here is the purchase. And again, let's talk about from my web store as opposed to from a marketplace.
Right. So this can depend on state. So it may depend on what state you as the seller are in and what state the buyer is in. There are states that are what are called origin-based states. So if you're in an origin-based state, then you collect sales tax based off of the origin of the sale or where your business is located. Most states are destination-based states, which means that your obligation as a merchant is to collect sales tax based off of where the buyer is.
Okay. All right.
So assuming that the scenario that you just walked through is in a destination-based state, which is what most of them are, it depends less on where the person who is buying the product is. It depends on basically like where it's shipped to.
Okay, got it.
So in most cases, it would be, the where you're delivering the product to would set the tax rate on how much to collect.
Okay, that was both complicated and clean at the same time. So, all right. So we are approaching the half hour here. Let's have some fun. Ryan, you wake up in the morning. What do you do? What's your routine?
First of all, I wake up painfully early. So I'm usually up 4:30 or 5, which probably leads to my next step, which is coffee. So I get my quiet time from maybe 5 in the morning to 6:30. And so I like to drink coffee, catch up on email, those types of things.
Bingo. As a parent, I share the exact same routine. So cheers.
Awesome.
So I guess on the flip side, what about TaxJar keeps you up at night? What do you worry about the most?
Boy. I feel like we've been a little bit lucky in that we've said our problem has always been about execution. Like I'm on my 4th or 5th or 6th startup now. And I think the typical challenge is like, where do we find customers? Where do we find revenue? How do we find growth? And we've somehow come into a place where the challenges have been a little bit different in that like, this is a really big, hard problem. And so it's never been for a lack of like figuring out what the next thing to do is. It's all been about like, how do we do this so well that we provide a great experience and stay focused on solving like the problem at hand. So I would say it's all about like, are we defining the right priorities to execute the best that we can and make our customers happy?
Beautiful. Great. Very good. Let's see. Who has been a great mentor in your life?
Great mentor. I have had a couple of phenomenal managers who I've worked for in my days. I'm thinking of 1 or 2 who are now investors in our company. And I feel like I've always had a business mind, but I think I give a lot of that to the businesses that I've worked for and the leaders that I've worked under. So yeah, that's probably where I think about my mentorship mostly.
Very nice. Very nice. Another personal one. Thinking about your journey, has there ever been like an aha moment for you or some kind of like critical pivot point?
Yeah, there has. For the first, this is probably not all that uncommon, but for my first few jobs, I worked in big company stuff and kind of always like, found the next job and it felt like a better job and I go to that job. And I spent some time at Intuit and we acquired a company there and I had the opportunity to run that part of the business for a while and learn a bit about entrepreneurship. And I kind of got to a point where I felt like I had learned enough to where now there was kind of a shift where I'm like, when I think about what's next now, it can either be going down path A, which maybe is more of like, what's the next big job within a big company? Or I felt like it was the first time in my life where I actually could open up to new options. Like I didn't have to be geographically constrained anymore. It didn't have to be the next corporate job. I could think about being an entrepreneur. And I think that's kind of what ultimately led me down this path. But I got to that point where I just, and it wasn't as much like financial or I don't know, just I got to the point where my mind opened up and said like, you can think about doing whatever you want next. And it was a pivotal moment for me.
Exactly. That's huge. Congratulations. Yeah. You hear about people getting the, serial entrepreneur bug. And I think it's for this reason that you're just the potential and you get to create your own rules, right? Like build something from scratch.
Exactly.
That's awesome.
Yeah. Well said. Yeah.
Cool. Let's see. So aside from tax software, are there any common threads you see amongst, like the successful businesses that you work with?
So you're talking about like customers of TaxJar, what makes them successful?
Yeah. Anything about like their practice, how they built their company, anything about their teams?
Yeah, one of the things I see a lot is in owners or founders of businesses, the kind of the grit, competitive, I'm not going to fail.
Yeah.
And that's something I see that in our customers. I see that in partners. I see that in, the way that our investors look at people. And I think where people just refuse to lose and have the grit that they know that there are going to be hard times and they're just going to find ways through it. Yeah. That's one that's important to me. I think the other one I think about is the being practical about, how to grow. And again, whether that's for our business or for merchants selling online, I think a lot of people go into business expecting one thing and the successful ones come out with something that looks different. And, for a merchant, whether that means, you end up selling a different product than where you started, or maybe you started out selling in a marketplace and you ended up multi-channel across 10 platforms, right. Those are just the things where you don't know what it's going to look like on the other end. And when you start the business, as long as you're open-minded about what success looks like and you're able to, kind of try new things and follow a path, I see that those are signs for success.
That's awesome. That's great. So it sounds like open-mindedness is key, but is there any other advice you have for a small team looking to grow and to, scale quickly?
Yeah, I could think of so many. When you talk about a small team, there comes a point pretty early on where you realize that the team is so much more important than an individual. And, we're a bit bigger, but I don't think that has changed, where as soon as you start hiring people, thinking about, when you get the right people, it, and they start moving the business in ways that are better than probably you ever could. I feel like I've been lucky to where I've built out teams and been able to hand off kind of chunks of what I do to people that are just way better at it than I am. And to me, that's like, at the end of the day, one person can't build a big business. And so what that means is as soon as you start hiring people, you have to find the right people with, the right cultural fit, the right passion, and, the right experience or a way to get to that experience. And that's what moves the business forward at the end of the day.
Awesome. I love that so much. Cool. All right. So we'll get a little bit lighter. I realize those are pretty heavy.
Okay.
What is your favorite food?
Oh, I guess I got to go sushi. I could go all kinds of sushi, but I'm a sushi guy, which, by the way, being in the middle of Colorado is probably not the best place for it, but it is what it is.
Hopefully you have some really good deliveries.
Yeah, right.
What is an item on your bucket list?
You know, I just checked one of those off this past winter.
Wow.
Yeah, so, and it was probably top of my bucket list, which it was heli skiing.
Nice.
So I got to do that for the first time, and we like to try.
Why did that take so long?
I've only been here for 2 years.
Okay.
Yeah, and I don't know. I guess the difference between getting in a helicopter and skiing versus on a lift is just significant to me. But
that's fair.
Yeah, so I think other ones for me are probably around travel. We've been to a lot of places, but there are a lot of places that I feel like we should have been by now. We haven't. Like Italy's a place where I want to go really badly and haven't been. So that's pretty high on my bucket list. Hopefully COVID things get better soon and we can turn that into a reality.
Fantastic. And then you can heli ski in Italy.
Is that, I guess you probably could, right?
Out of the water. Yeah, cool.
Yeah.
For this COVID period, do you have any goals, whether it's personally or, with the company?
Oh boy. I think if I were to look back, I would say survival in terms of like managing chaos.
Very well said.
Honestly, not really. I guess my view on this is I feel super fortunate to be in the position that we're in. My family has stayed healthy. Kids are at home and they drive me nuts. But we're able to, we've got some space. We're able to play outside. Like I said, everybody's healthy. So I take it day by day, try to not let it get to me too bad and just know that the end will be here and we'll get through it. So
exactly. Very good. Okay. So let's pretend like that end is here. COVID is a thing of the past. You're free to go outside. What's the first thing you're going to go run and do? Daydream a little.
Probably travel somewhere. We try to get outside and go for hikes and ride bikes and do all those things. So like I said, I feel fortunate we get to do those things, but I haven't been on a plane in a while. And so it'll either be, figure out a cool place to fly to, or get a bunch of family and friends together. Most of my family is on the East Coast. I haven't seen them in a while. Yeah. So, maybe I could have like a big shebang, 100 people gathering and have a good time. That'd be pretty good.
Very good. Awesome. You are not alone in either one of those. So you can come visit us in Maryland. We'd love to have you, and we'll have a big bash here.
I wouldn't tell you who my football allegiance is because I don't know if I'd be too welcome in Baltimore, but that's okay.
Yes. Something in Pennsylvania with some stars, little black and gold.
I grew up in Wheeling, West Virginia, and Pittsburgh was the nearest city. Not that I need an excuse because that's my team and I love them, but yes, you picked the right one.
Bring the towel. Awesome.
There you go.
Ryan, this was an absolute pleasure. I learned a lot. I had a really good conversation. Thanks for sharing all of your insights. If folks are interested, I know that to work from Zentail and TaxJar, it's a matter of like a data export. But if folks want to get in touch with your team, what's the best way for them to do that?
Yeah, you can email support@taxjar.com. I'm always willing to share my information too. I'm just Ryan, RYAN at TaxJar. We love having conversations with folks, even if it's just around educating with some of the complexities around sales tax. So get in touch. The other thing I'd say is our blog. This may sound kind of painful, but we have a blog with now more than 1,000 articles all around sales tax, which we try just really hard to make it simple for merchants to understand these things. So that's another good resource for sure.
Perfect. Thank you. Yeah. And again, I'll be sure to share all that. Stay healthy. Looking forward to see you guys again in the future. And that wraps it up for us. So
thanks for having me. I really appreciate it. Thanks for the time.
Absolutely. Bye.
Bye.